Is it possible there's a scenario where you'll just see the price of actual physical silver in hand continue to increase regardless of what the COMEX price does?
The land of Arcadia.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. As we dig back into matters economic and, of course, silver related, which to me is really at the heart of the economy, so much of it fueled by printed money, and then you have to mask it up by stuffing the prices of the precious metals, gold and silver, lower, as Ross the boss at the CFTC is so fond of doing. Although, with that said, there are still some interesting developments as we keep an eye on silver in the broader context of the broader economy, rather. I wonder when this market, which has been so disconnected, will finally have some connection. Although it's interesting, is it possible there's a scenario where you'll just see the price of actual physical silver in hand continue to increase regardless of what the COMEX price does, which is basically the situation we have here. Again, junk silver premiums back, break 20%. And I'll also pull up the silver chart because now this is going to vary depending on which product, but you are looking at. But if we take a look back, nice spoof in the 1 day chart there. But if we take look, here is the 3 month chart, and you look April 17th, let's call it there. We'll close this one out. 26, 15, 26, 20-ish, down a few dollars. And in many cases, you see prices of physical silver going up quite a bit. Rafi was pointing out the junk silver premiums, which I think is a good one to start with. Now, obviously, if you look at the American Silver Eagles, the premiums are higher on there. And I'm not sure if that would be the first metric I would look at to say what is the cost of physical versus paper, although it's certainly a good one. Just maybe junk silver first, American Eagle as something that is well known and people do pay a premium for. You can see 36.60. Now that's if you buy a bunch of them. Let's see what the per price comes out to. That's one plus. They're just saying 36.60 here. If we look over at here, you get one of those grids, 36.52, but that is when you get in a bulk size there. But even calling it the 36.60-ish, here you see they're marking a spot of 23.53, 23.61 here. So 36.60, that's $13 over on your American Silver Eagles. I got a 54% premium on that. Someone can check my math, but I believe it's it's over 50%. And junk silver premiums, again, here we see break 20%. But I think more significantly than the actual number is really a way of thinking of it that I think is relevant that Rafi nailed again. This is our dear Rafi Farber from the Endgame Investor and the Endgame Investor Weekly Silver Report on the Arcadia Silver Network. They'll be coming your way tomorrow. And hopefully, I believe he'll be digging a little bit more into this. Here you see a couple days, the day before, silver premium spike. And here, junk silver premiums just broke 20% for only the fifth time since 2008. If we take a look at the chart, we see something unique since 2021. All other times when junk premium spiked higher, it was a direct result of a spot price collapse. 2008, 13, 15, and 2020 were all collapses in the silver price. And so the premium spike was really the price of physical staying stable in the face of a spot sell-off. And again, I think that makes sense to me where now if I were playing in the size and actually you could get those contracts delivered out of the COMEX, then that, there is that different institutional market, although I'm sure a bunch of you have heard that story of, again, I was not there. I've heard this in other interviews that have been posted, but that Eric Sprott, maybe even a decade or maybe several years back, tried to take a large delivery. And basically they gave him the speech, which I guess Warren Buffett got the speech. Interestingly, Andy Hecht, silver writer on Seeking Alpha, says in one of his articles that he was given the speech. I don't know if Rusty would be the one to give the speech now, where basically it's like you're not taking delivery, or if you try and take delivery, we're going to stiff arm you in this way. So, is that exactly how it happened? Again, I couldn't say for sure, but I heard that story. So I think there is some truth to that. And so for the rest of us, where does that leave us? Where if you actually want physical silver, well, you're paying the retail prices, and certainly you could have the scenario where that spread between physical and paper comes back in. But so far, that is not the case, as you see by the just breaking 20% on the junk silver. So that's the banker's game to some degree in the institutional market. And right now, the 20% premium, to me, that's what I have to pay to get silver. The price on the Eagles, this is what people are paying to get silver. I mean, maybe better or more or less some places than others. But so I think, if I want to stack silver Eagles, maybe not my first choice, but let's say I did, and the price is just $36. If COMEX silver goes down $1 tomorrow, it's still $36. Well, then the price of a silver eagle or a junk silver or a 1,000-ounce bar or any of these can diverge. And perhaps that might be more relevant than the COMEX price. Obviously, there is a tie, but we're seeing that band stretched. And perhaps only Ross Benham of the CFTC knows when and how hard that will snap back. He has not responded to me or the evidence I submitted last year, a day after it was 12 days after his silver investigation began, 11 days after the crime occurred. But we'll see how that goes, or if he lets us know what JP Morgan was saying on their chat transcripts where they're avoiding regulators. But anyway, back here, here's the key part. So the premium spike was really the price of physical staying stable in the face of a spot sell-off. And the prices of physical junk silver itself was not really moving all that much. Although, with all that said, this time is different because premiums bottomed out in January 2021 at just below 4%. The spot price then was around the same as it is now, but premiums have quintupled. So yes, since silver squeeze, the true price of physical silver is up by about 15%. This will also be a good end game indicator as to how close we are. If premiums fall as the spot price climbs, as has happened from 28 to 2011, they actually fall below zero, and junk silver was selling at a discount to spot. We'll know it's just speculation for dollar profits, not a true run on the dollar. If, however, the spot price keeps climbing together with premiums, then it's the physical silver market that is breaking through, and the run on the dollar has most likely started. So, again, I don't know that there's any one set way that these things can play out. It will be fun to watch, although one marker on here, we do have 2 days till COMEX silver deliveries as reports. 25,514 contracts remain with 17,000 registered contracts worth available. Usually they do roll over enough of those contracts. I would imagine it will be the same in the next couple of days as well. And probably the fact that you have those contracts standing for delivery, I'll bet if we knew the true intention of the folks involved in such matter, that it would not necessarily be a complete coincidence that we've seen such a sharp drop in the price here. And when you think about what really drives the COMEX price, I mean, here from the other day, silver demand to reach its highest on record in 2022. Those were the words of the Silver Institute. Nate Fisher walked through the whole table yesterday. And again, we see what's going on there with the Eagles. I bring the silver miners on all the time, and they explain the supply and demand situation not getting easier to do, especially now with rising costs of just about everything. So what is it that actually does set this? I haven't really, in my entire Wall Street and beyond career, been able to figure much out other than how much paper the banks, the Exchange Stabilization Fund, and the CFTC, other arms of this entity, hammer on there. Bart Chilton confirmed that. Ross Benham, well, he didn't confirm that. I guess he did to his buddies, not the rest of us. But Anyway, so in the meantime, we will watch these indicators to see what sort of stresses and pressures are on the market. Also, going to be checking in with Bob Coleman next week. Many people are familiar with, active on Twitter, and he's pretty directly involved on the wholesale level and has had a lot of interesting things to say. So, a great reason to hit the subscribe button and notification bell for when that comes your way. And perhaps one thing it'd be interesting to get his comment on. I'm not sure what to make of this, but I did want to pass it along. Here you see SLV last 4 weeks added 24 million ounces. So again, once again, while the price is dropping, SLV adding silver. Now, I don't know if it was because investors were rotating in Wall Street parlance out of the Deutsche Bank. Now, I don't want to incorrectly call it a fraudulent silver trust. I would not purchase shares of that. Although it is possible that perhaps someone was reading this article. This is a couple years old, but where you have the transcripts between Deutsche Bank and HSBC traders talking about how they really want to sell silver, to which the other trader says, let's go smash it together. So it's possible that someone could have come across that article a couple years later and say, gee, I better pull my silver out of Deutsche Bank. And maybe they were not aware that even after being fined $920 million, that then the CFTC ordered JP Morgan to pay another $75 million, not only for use of employees' unapproved communications, but once again, widespread use by employees at JP Morgan of unapproved communication methods and related record keeping and supervision failures. I love that that the CFTC put WhatsApp, just like, not like social media or modern day communications, like WhatsApp, just nice slang term. Now, I've not seen word if the CFTC knows about Signal app and if they've checked the Signal app conversations of JP Morgan traders and what they might have been saying during the Silver Smash weekend from Silver Squeeze last year. So in either case, though, perhaps some metal was coming out of the COMEX. Maybe people tried to get delivery out of there. We're concerned. Now, this is all speculation. But in either case, I'm somewhat joking, although you never really know with this gang. But we see metal coming out of COMEX, coming out of Deutsche Bank. And once again, metal going into silver as the price falls, seemingly defying the laws of supply and demand. Although fortunately, Ronan the Destroyer Manley, who I've had contact with recently, I think we're going to have an interview going down there soon. Although fortunately, he did write this article that has paper silver versus physical. Paper silver market 243 times larger than the physical silver market. That's by paper silver trading volume versus physical silver supply. So 243 to 1. I mean, now there's no exact, perhaps perfect way to measure this, although here you see LBMA at 251 to 1. And then the COMEX showing the American, really supersized mentality of 886 to 1. I always thought that was funny when I lived in the Netherlands. They talked about how Americans supersize everything. Why is everything so big? Cars, French fries, it's so large. I guess there's some truth to that. We do supersize things as Americans. And certainly the banks have supersized the amount of unallocated metal that you can sell. They've supersized the currency, the debt bombs, the paper silver, and we'll be a fan to see how they unravel this. So, but interesting. And you can find this on Bullion Star. Ronan Manley, this was from July of 2021. I had not seen that before. Someone passed it along though, and the numbers are probably even bigger than that. So you can enjoy that. Although here we did have, this is shocking stuff. We did have tweets out of the CFTC today, and I wanted to make sure that everyone was caught up on this groundbreaking news because, as you would imagine, industry-changing stuff. Now, no, I am not talking about Ross providing the results of his silver investigation, but you see the CFT announces a staff roundtable discussion on non-intermediation I mean, what kind of show would this be if we were not covering that? There- there's there's me commenting. Although even more exciting, we do have some updates out of Ross himself. Looking forward to participating in a conversation about regulating digital assets at City Week 2022 Guildhall tomorrow. I guess this was a couple days old, but hope to see you there. I did not see anything about the results of the silver investigation. So again, but there you go. Oh, and speaking of his testimony in front of one of these committees, I have coverage of that coming up as well in the coming weeks. So anyway, that is the news out of the CFTC. A few last things before we wrap up. Obviously, there's this deal with Elon Musk buying Twitter. Just a few things I found interesting. Motivation for Musk in buying Twitter may be political. By spending $44 billion on this particular vision of free speech, he cemented an alliance with the American far right. I'm not sure exactly whose opinion this is, but wow, that would be a lot of money to spend on defending free speech, which I mean, I think would be admirable. I'm not could be a bit of a stretch. I'm still a little bit confused by Elon and how he manages all the different things he does. I he's got rockets and artificial intelligence, and while the Twitter thing is going on, also a lawsuit with $2.6 billion Solar City acquisition. And by all means, I'm all for entrepreneurship, but just seems like a diverse range of businesses to me. So, but anyway, there's Elon Musk news. Was this part of the plan? Also from Zero Hedge, U.S. trade deficit worst on record, Russian trade surplus highest on record, which is a common theme in American trade flows. Not traditionally a sign of economic strength, yet nonetheless, how these things are going. And you see Russia, we've had a lot of attention about Russia and the gold backed ruble. So, wow, it would be interesting to imagine what the Russian decision makers think about silver. I might pass along that it's either 2003 or 2004 when Bill Murphy, Chris Powell from GATA, I don't know if they were, I think they spoke directly with some Russian officials who basically came to one of the conferences they were at. So, saying this just in the sense that it seems as if they've been aware of the gold and silver manipulation. Certainly, the events that I've seen of the last couple months would suggest as much. And with that said, you have that behind the trade surpluses there. And here, Joe Biden has a 5.2 million in unexplained income, which we'll see how that goes. No word yet if that is a result of the Putin price hike. Although, again, in summation, while COMEX silver is down, those folks with physical silver products have been benefiting from the Putin price hike, driving commodities higher across the board. So, anyway, that is today's silver and economic news. I thank you for being here with me. And if you enjoyed today's show, especially in today's economic environment where you're not always so able to say things freely on YouTube, which hopefully Elon Musk will defend, yet to get these videos delivered straight to your inbox, as well as updates about some other exciting things that we'll be doing, you can go to arcadiaeconomics.com, and that's how you can get it straight to your inbox. And with that said, again, hope you're having a great day out there. And tomorrow will be Rafi Farber's weekly silver report. So I hope you enjoy that, and I'll see you again soon.